What's up, everybody? I hope you're doing well. Today we're going to learn about CVD. First of all, what is CVD? CVD indicator measures the cumulative difference between the buying volume and selling volume over time. Time is the most important thing that you have to note in this definition. Before we go further into the theory of it, I wanted to introduce you to this website, coinallies.net. Go to this website and click on the markets and click on the exchange that you're trading. In my case, Bybit, and remove this. Add an indicator CVD, cumulative volume delta, and there you have it. Okay. You need to understand what I'm talking about when I'm talking about all those, or you're not going to understand how to use it. First of all, why do you have to understand CVD? Because you need to know what the whales are doing. It does not matter what you think, okay? What matters is what the whales are doing, because they always know better. Because they have access to more information, and they are more experienced than us, right? So they are going to make better decisions than us. So it is always easier to follow their footsteps than to make a decision of our own. Okay? So this indicator helps you determine what they are doing instead of what you are thinking. Okay? CVD indicator can also be used to identify potential market reversals, which means when the price is moving down like that, CVD divergence helps you determine when the market is reversing. Okay, we'll go into that in detail when we talk about this in different time frames. For now, just understand this helps you determine the market reversals, number one. Number two, it helps you identify the bias or determine the bias. Like, when you open a chart, you don't know whether you're going for a long position or a short position, right? When you understand CVD, you know which way to trade more effectively than using any other techniques, okay? Additionally, divergences between the CVD and the price action can provide insights into the strength of buying or selling pressure, which can inform trading decisions around long or short positions. I'm going to explain that in detail when we go into the chart. So, what is divergence, eh? Like, when you're doing RSI, when the price is moving up and the RSI is going down, there is a divergence from the price, right? So that's what we call a divergence. That is, here, the price is moving down. Here, the divergence CVD is moving up. So here is a divergence. So you have bullish divergence and bearish divergence, and we're going to go over all of these in detail. Which time frame do you have to use it? You can use it on any time frame, even on 5 minutes, and it works like magic, okay? And then when to use it and why to use it, to determine the bias, to determine the trade direction. Now let's dive into the chart and understand what we're talking about. Now let's go to the daily time frame and understand how it works on higher time frame, okay? So what you need to know is when it is decreasing, it means that the whales are opening short positions, and when it is increasing, the whales are opening long positions, okay? That is first thing to understand. And let's see how it worked on different scenarios. So this right here, identify the consolidation range first. So this is distribution. So it was consolidating here, and the price was declining, right? Okay. Sorry. I'm really sorry. The CVD was declining and the price was increasing in the consolidation. This is where everyone was getting into crypto, and that's where the mainstream media is going to talk about crypto, and that's where a lot of people get into crypto. That's where the meme coins explode, okay? So that's where the whales were taking profits on their positions. See, the CVD was declining. They were building short positions when this was happening. Okay. Again, you have this right here when it was going up. the whales were building short positions. Again, when look at this one. This was the bottom of 2021, and see what happened. The whales were building long positions during this time. And again, this is 2023 bottom. Let's see what they were doing. Okay, so this is the consolidation range from here to, they were, technically like all of this was consolidation, right? So the whole thing from here to here was consolidation, at least until October. It was not moving, right? So that's when it bottomed, and that's when it was. So from here, okay, so there is a deviation here, right? So inside this range, probably like, you can take this as the consolidation, because this is where the breakout happened. This is where the market structure shift. Okay, you take it here, and from here to here, it was actually going up. So you know that it was going to go up. So what you need to understand is like, you have to measure, first of all, determine the consolidation. And if you determine where the volume is moving, you know which way to trade. So now let's see what is going on right now. Right now we are in this range, and last time I saw this much of short positions is when this happened, or this happened. Otherwise, I've never seen it happen like that before. Like, all this while we had one here, and then it dropped here. However, this is pretty huge. We may see a little bit of decline, at least up to 50K. Okay, so this one is what you need to know when it comes to this one. So when they are building short positions in the distribution range, you need to be really careful. Okay, and now how to use that in trading. So you have this indicator, CVD candles, by trading you. Get that on your chart. And now let's see how it works on lower time frame. Okay, so right here, this is consolidating. So this was a consolidation, right? In this area, let's see what happened, and let's see if it is working. Okay, so they were building short positions, and then it dropped, right? And then let's see this consolidation. Here it looked like they were building short positions, so there is deviation when it comes to lower time frame, but it always works on higher time frames. Okay, so when it comes to higher time frame, as you can see here, this was a major distribution, right? And let's see what happened here. So as you can see, it declined, so it means they are building short positions, and then they dumped, right? And again, now let's see what is going on here. See this one, and from here to here, they were going up, which means why we're shorting them, right? Because the structure is not bullish. So once it goes down a little bit, it is going to bounce again to this fair value gap. If it has to bounce like that, it has to go down a little tiny bit, like 5 to 6%, and then it's going to jump 20-25% before it actually drops down. Okay, so that's what you need to understand, that this CVD is more effective on 1 daily and 4 hour, and not so effective on lower time frames. Okay, I hope you find this helpful, and I'll see you in the next session, where we're going to talk about open interest. Okay, and also like the volume candles, that's going to be another session, but this is something I wanted to talk about quite a while now. And go to your chart and slap this indicator on your chart, and try to go over all different scenarios so you get familiar with this concept. Okay, thank you so much for listening. You have a good night. Bye.